Yes, miss.
Amir,
Yes.
okay, you can start now.
Okay. Good morning and
Hi,
Assalamualaikum to Madam
Miss.
Nursia. My name is Emir
But
Khalid, and today I'll be presenting about investment analysis. So I'll start with the introduction first. So based on the first point is what is actually investment analysis? So investment analysis is actually a process of evaluating an investment. And also it act as a measuring tools on either the investment is good or bad for a portfolio. So basically, investment analysis is actually a process of judging the investment in terms of the income, risk, and also resale value. Investment analysis is also a process of evaluating an investment for profitability and risk. So the purpose of measuring is to how the given investment is a good investment or not a really good investment. So I move to the EMH. EMH is actually stands for efficient market hypothesis, and it's actually a hypothesis in financial economics. Move to the second point is EMH helps to explain the good and bad in buying stocks. EMH states that asset price reflect on all available information. The available informations in terms of the investment securities, stock market, stock price, and also the market value. And then the next point is the investor can make their own decision. They can have their own strategy, but the market is always right. So meaning by this, investor can have their own strategy in buying and selling stocks, but only the market will know about the outcomes. And the last point is EMH also act as one of the underlying reason for the investor so that they can choose it's either they want to make a passive investing strategy. The meaning by this is usually for an unusual reaction to unusual information is normal, because let's say if a crowd suddenly start running in one direction, it is normal for the investor to also run in that direction as well. Then move to the next point is there are three forms of EMH, which is the first form is weak form EMH. Weak form EMH suggests that all past information is priced into securities, and the fundamental analysis of securities can provide an investor with information to produce return above market average in a short term. But the disadvantage is there is no pattern that exists. Meaning by that, this fundamental analysis does not provide a long-term advantage. It's only provide for the short term. And then the second point is semi-strong form EMH. It actually implies that neither the fundamental analysis nor technical analysis can provide an advantage for an investor, and the new information is instantly priced into the security. And the next one is strong form EMH. The strong form EMH says that all the information, both public and private informations, is priced into stocks, and there is no investor can gain advantage over the market as a whole. Just like I told you before, the investor can have their own strategy, can have their own idea on how they want to invest, but the market will know the right. And then the move to the next point is the importance of EMH. The first point is maintain the prices of the securities, such as stock reflects all the available data in the liquid market. There is no amount of analysis can give the investor an advantage over others. However, some abnormalities arise in the market which an investor can take advantage can take the advantage in making profits over the average. And then the second point is EMH also act as a tool to develop strategy in buying and selling stocks. So basically, the EMH is actually a hypothesis in financial economics that states that asset price reflect all available information, and a direct implication is impossible to beat. It is kind of impossible to beat the market consistently, because whenever you are doing trading, whenever you are buying stock or selling stock, it is kind of not impossible, but kind of hard for you to keep your consistency. Meaning by that, it's kind of hard for you to always earn profit from it. So basically, the idea of the market efficiency is very, very important for the investor, because it's allow them to make more sensible choices. Okay, so basically from this point, the idea is very, very important, because the only way for the investor to get above the average profits is actually through investment in different markets by taking advantage on any abnormalities when the market occur. Next one is this one. I'll start with the issue regarding to my article that I choose. So basically, the topic for my article is independent system operator, the investment issue. So independent system operator, or in another word, we call it as ISO. It's actually a central issue. But before that, I'll explain about what is actually ISO. Okay, IXO is actually an international organization for standardization. It's actually a non-government association. So the role for ISO is in every product or services that you're going to sell or buy, it must have a certain standard that the product need to reach. So the role of ISO will make sure all the organizations, such as it could be in terms of food chain, supply chain, services, product and services, and so on, they will have their specific standard that they need to achieve. Okay. 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 ISO is actually a central issue in the design of an ISO, is that of investment. How and by whom will the investment decision be taken, and who will carry out the investment strategy? So basically, ISO will play a role in gas and electricity markets in United States, and also IXO will help to explain in decision making and the flexibility in the market. Meaning of the flexibility in the market is the strategy for the investor to play along with the graph in the market. Okay, so move to the next point is issue and problem. So basically, the first point is who is to establish an ISO, and what should the governance structure be like? Okay, so from the first issue is there are two main reasons for establishing an ISO, which is ISO help in a better horizontal coordination between the different system operators in order to increase the security of supply, and also the promotion of the competition. And the second point is who will decide upon investment and who will carry them out. Okay, from this point, what can I say is the considerable difference between the ISO model can be encompassed by the so-called balancing ISO and deep ISO. So meaning by the ISO can have two model, which is balancing ISO and also deep ISO. So the difference between these two is that the deep ISO have the competence over the investment decision, while the balancing ISO does not have the power in terms of deciding the investment. So the next point is this model is actually characterized by the separation of system operation from transmission, facility ownership, and investment, and also maintenance. So from this, actually, this model, as well from the ownership of generation and marketing businesses, the ISO does not own or maintain the transmission assets. but the ISO is responsible for scheduling and dispatching of generation and load. Okay, next is the example is like it manage and enforce rules for the allocation of scarce transmission capacity. Okay, so move to the last point, which is the solution. So the solution from the issue that I stated just now, there are three solutions, which is the first one is multi-day ahead market. So multi-day ahead market means they will expand the current 1 day ahead market into multi-day ahead market, which is they will optimizing the energy over a multi-day time frame and producing multi-day clearing prices for market participants. So this is actually the first core components in voluntary market for forward energy transaction. Uh, uh, Multi-day ahead market is actually effective in terms of extend the existing single day ahead market to operate on ruling. So basically, the example of this, if the example for multi-day ahead market is, let's say you are working for 5 days a week, but in order for you to improvise, you will extend your working days maybe to 6 days or 7 days a week. Okay, the next point is new ancillary services in the day ahead market. But before that, the meaning of ancillary is side, or in Malay we call it as sampingan. Okay, so from this, the investment company or the investor will create several new voluntary ancillary services in day ahead market, and they will provide the flexibility of energy depends on the demand to manage uncertainties on each operating days. So basically, these services are intended to help to make sure or to ensure that the system is prepared well and has the capabilities to be managed. And then the last point is seasonal forward market. So for seasonal forward market, they will conduct a voluntary competitive forward auction that provides asset owner with both incentive and necessary compensation. So to invest in supplemental supply arrangement for the coming winter. Since this article is regarding to United States, so seasonal means season. So for in US they have the winter season. So basically in this one they put a focus or a strategy based on the seasonal season for United States. Okay, wait. Okay, Miss. So that's all. Thank you. Hello.
Alright, thank you, Amir.
Okay.
We move to the next presenter. Okay. Joey, you can stop presenting the slide. And for each one of you, you need to email to me the slide and also the article. After the class, no, no.
Miss,
Okay.
and wake up
Yes?
Shafiq. I want to call Shafiq
Sorry?
because I want to call Shafiq because he's not in the class. I'm afraid that he's still sleeping.
Oh, okay.
Okay, Miss.
Alright, we may call him. So, Joey, are you there?
Yeah, I'm here.
Okay,
Can I
okay.
start now? Miss, can you see?
Uh, yes, can.
Okay. Do you need any info?
Any info?
Yeah, just now you need to jot down, right?
Oh, okay, okay. I already screenshot.
Okay, okay.
I just screenshot the first slide for your name, for your name.
Oh, for my name. All right. Okay. So, good morning, Miss. My name is Joey here. So today I will discuss about the investment analysis based on two topics. So, wait.
It's moving, right? Is it video?
Yeah, it's actually moving.
Oh, it's
But
moving.
yeah.
Wow, so advanced.
But the problem is, even it's moving over here, it's like okay. So sorry. Okay, wait.
You have to come out this slide.
I need to go back again here. Okay. Okay, so the presentation features is based on two topics as mentioned. So the first one will explain the concept of efficient market hypothesis, and the second one will be taking out article summary refers to philosophical issues in responsible investment, a care ethical approach by Tommy Johanan Dadderton in 2013 based on US report. So, okay. So what is EMH? EMH stands for Efficient Market Hypothesis. A hypothesis will be in financial economics that states an asset's price reflect to all available information. A direct applications towards beat the market, consistently a risk adjustment basis since the market price should only react to new information. Such of this clause will be meaning to say that EMH is more towards a technique to solve markets analysis hypothesis and get more information to solve the problems. And EMH actually is a model can develop towards resolving stock markets in related to investment as well as to operate it more smoothly. So it's actually undergoes another options. It actually formulates in terms of risk adjustment. So it's actually testable to predict a couple of critical models such as the models will be using on stages such as weak forms, semi-strong form EMH, and strong form EMH. So I will basically bring through that. Weak form EMH is actually current price reflected all security markets historical information. So this is actually means by it's only redundant towards a certain market that can be applicable to search online or annual reports. So such as historical sequence data or rate of return, trades volume data on other market generated information. You mean to say it's a brief, but it's already been passed. So EMH for weak form, it's actually only related to past rate of return. So it cannot to be justified as the future ones, only can be judged the past and to analyze it. So semi-strong forms EMH is actually basis on current all security markets in historical and current. So it's actually basis to two markets and other market segmentation information, but it doesn't have leads towards above average risk adjustment profile. So meaning to say that semi-strongs is actually just only analyzed for both markets, but they cannot predict for the future as well as they cannot do a better analysis towards their profit margin. And in details of it, the last one will be strong form EMH. It's actually fully reflected to all informations in public and private sources. So this is actually in a full sentence of EMH, like how from the past can bring forward to the present towards the future and can predict how the profit margin can be increased or decreased. So this implementation in no groups of investors should be able to consistently derive, but it actually gives us a better group of flowchart to predict for next market sectors. So the implications of effective capital markets involves in EMH is actually recommends on these three: technical analysis, fundamental analysis, and portfolio management. So technical analysis to be a sum that it's actually direct proportionate towards the capital market. So once the technical or say digitalized analysis is much more advanced, our investments is getting more and more easier to find out and get the information directly. So this analysis is get more accurate value data, and fundamental analysis is more towards finance statement, towards the stock market to get more accurate systematic security and economic growth of factors. And the investors in for this interpreted value can get an investment point and share market bonds price. And portfolio management, it's actually basis on the product, how it actually conclude, and getting out the client's principal needs. Meaning to say that, for example, if we are actually in a stock market during this pandemic, you can actually say out how clients' risk and bonds is actually impacted towards the management and get the better accurate value. So based on that will be the first question. Now it's coming up to the article summary refers to this psychology. Okay, so based on this article, actually basis is very easy. This study is actually discussed on the issues of prospective stock investment. So this identifies the values of, validates and explain the ethical problems and possibility concern in principal response investment. So this actually, regardless on the terminology using quantitative method on this report, it's using models type to analyze how this investment can be bringing out and how the issues can be solved using the theories that we're using. So because this article does not involve in solution using models and theories, so I just only explain what's the issues about it. So some of investment professionals actually using spokesperson to ethically concern on public as well as small investors. And okay, what's the issues and responsible investment? So the first thing is ethical principles. Some products and raw materials are actually easy to be targeted towards investment, such as cigarettes, tobaccos, and for their raw materials investment, such as in US status, because this report is based on US. So it's actually easy to be changed due to the climate changes, due to the weather. So when the value it's actually when we use this for economic sectors as supply and demand, if the environment climate changes is actually very risky, the demand will be much more higher sometimes because the supply chain is much more lower. And the second one, it's no market department. So mostly there are companies that does not focus on marketing department towards the investment sectors. So it's actually hard to follow up clients' necessary data and as well as the stock values. So this is actually causing out the companies to invest much more lesser compared to the responsible investment that showing out towards the market. And the third one issues is actually socially concerned investment. So basically the investment that been setting out towards the company does not matches with the company's reliability stock. So it does not sustain a better relationship towards the company as well as the investment. So this is actually one of the issues why we need to do responsible investment towards the company as well as the business. And this is actually the book screening about positive and negative on responsible investment. So negative screening of this responsible investment is actually, they have a lot of ban lists. So we're taking much more easy course about, the example will be Bursa Malaysia. Bursa Malaysia is actually taking out all company stocks and investments yearly graph and stock chart. So it's actually easy to view out. But once they compound that this company is not relevant or the data is not accurate, they can apply towards ban list or report. So this is actually compound of ban list of negative screening of the company. Then they imposes different country and rights. Some companies actually export towards different countries of the product. So this actually affects them towards affecting their profit margin as well as the product quality itself. So for example, H&M, it's actually from a Western country. It actually comes to Malaysia to meet the Malaysia rights. If the clothes quality it's not meeting our quality rights, they may affect it towards their investment. So exclusion of investment as well, they also can be a negative screening. As investment, it's giving out a big portion of their values towards their profit and loss statement. So if the investment is not recognized, it's actually been excluded out, the money that they collected will be burned. And there's the last one will be the freezing ethical derivation. So this is actually affects us towards the ethical issues. And positive screening will be dialogue approach. So more to say that when we are actually going out to the flow of responsible investment, the dialogue approach towards the customers as well as the stockholders, it's much more easier. And investment will be based on bonding relationship. The second one will redirect the activity of investment. The third one, participate the investment strategy. So in terms of that, will be the strategy investment will be much more cooperative and giving out customers and as well as the managerial to get the investment strategy much more higher. And the last one will be care, ethical, ideal investment and investment. This is actually one of the theory from this article, meaning to say that they are more focused on the investment towards the ethical issues, so they can provide a better statement towards the clients who buy the bonds as well as to the company to reduce stock. Okay, so this is actually a few factors towards the principle of the risk market and investment. So first one will be business should support and respect the protect of the international proclaimed human rights, and businesses should make sure that they are not compelled to human rights abuse. So meaning to say that every investment or every market that we supplies towards the company, it actually must be ethical, so must be giving out human rights. Cannot be like unethical or causing out irrelevant negativity. So the second one will be labor. So businesses should uphold freedom towards association and effective recognitions towards the rights and collective bargaining. And the fourth one will be business should support the elimination of all forms and forces and compulsory labor. So meaning to say that companies must be equally treated towards the labor, meaning to say employees as well as the stocks that they buy, as well as towards the market, so they won't have uneven status. Then the third one will be the environment. Business should undertake initiative to promote greater environmental responsibility. Business should encourage the development and diffusions of environmental friendly technologies. Based on this is more towards corporate social responsibility sector, meaning to say that to meet out the sustainability of the companies to gain more profit and to meet out Industry 4.0. And the last one will be anti-corruption. So business should work against corruption to all forms, especially extortion and bribery. So some of the companies, even some companies that's not profitable, it's somehow will in fact to corporate corruption. So this is actually hoping out that not to related to that. Okay, so based on this article, we will conclude as the share investment is a part of economic structures and growth in essential goals. So meaning to say all investments that we analyze and to be used is actually must be ethical and must to achieve our goals that we vision and vision being applied. And from our perspective, investments should be primarily served towards people and environment, as well as the investment must be done smoothly. Basically on this careful evaluation, ethical acceptance and economical profitable companies must contribute human rights as well as environmental good. What's the word? Okay, so this is actually the conclusion that we made, and thank you for your time.
All right, thank you, Joey. All right, number 3 is Fatin. Fatin Atira, right?
Yes.
Okay.
Yes.
Okay, for the rest, please put a number in the chat room. Indicate which number of presenter that you will be. So for right now, we have 1, 2, 3 already. So you just continue 4 until the next one. Okay, just put in the chat room to put your slot. Okay, Fatin, you may start.
Okay. Assalamualaikum and good morning. I'm Fatin. So today I want to explain about investment issue article and efficient market hypothesis. So I will start with investment issue article first. So this is my article. The title is "The Fault with Default in Investment." Introduction. Legally, the fiduciaries responsible for the investment have the responsibility to cautiously invest the money for the participant. Typically, a plan committee has the responsibility, but it sometimes is assigned to specified officers of the plan sponsor. We use plan committee and investment fiduciary to refer to the person with the responsibility for the investment. So basically, when the person want to invest the money, they will appoint a plan committee or investment fiduciary, which is the person who have the responsibility for the investment. The preamble to the Department of Labor's DOL's 404C regulation state until a participant or beneficiary